Give us the framework for how you see this this trade skirmish or trade war and how it's developed in the last 72 hours.
Well, as I mentioned in my commentary in Foreign Affairs, that everybody loses from the trade war. So what has transpired in the past 72 hours, as you mentioned, last Friday, is, I think, a positive sign. It seems that they have made some progress, although we have seen this before back in June. So we'll have to see whether or not the parties will sign on the dotted line in time, let's say, for the meeting between the two leaders, I suppose, next month.
The Global Times tweeted a few moments ago, quoting some customs officials in China, that it's a bright turn from a gloomy week, in their words, but that analysts are nervous about unpredictability, citing U.S. flip-flops in past trade talks, and they tagged the president, Donald Trump, on Twitter. Does that accurately reflect the view in China that they're mistrusting of the United States in holding on to their commitments?
I think there's some sense in that, so we'll just have to see what eventually happens, because as I mentioned, it has happened before, since back in June. So now they, I think, have reached an understanding, but the devil is in the details, so they have to work out the details and agree on a piece of paper.
Shan, in your op-ed, you say that the numbers suggest that Washington is not winning the trade war because tariffs hit U.S. consumers harder than their Chinese counterparts. Does that mean that China has more leverage as it negotiates this trade war?
Not necessarily. I think both parties lose from the trade war, but the numbers suggest that the damage to the U.S. side is greater in percentage terms than to the Chinese economy. That doesn't mean that the Chinese economy is not severely damaged. And I think for China, the business confidence in particular has been hit very hard in the past 15 months or 1.5 years. So I think some progress on trade negotiation will be positive for both sides.
Shan, given your history of deal-making and how much experience you have in M&A, I mean, there have been reports here in the U.S. in recent weeks that the administration here could potentially put restrictions on capital flows to China. You're also seeing some tighter standards be floated right now by lawmakers around CFIUS. What do you expect to happen in terms of cross-border deals and also just investment flows moving forward?
Of course, any restriction on capital flow is bad for investors. But from my point of view, as an investor, and we invest billions of dollars in Asia and in the United States and in Europe as well, capital flow restriction is always bad. But in this world, there's a lot of capital. There's a lack of investment opportunities. And therefore, I think the provider of capital typically suffers if there's a restriction on where to invest, whereas it is actually more difficult from our point of view to find good investment opportunities. I think such restrictions, again, will be bad for all the countries involved, especially for investors. And from our point of view, we represent many of the American investors, and we have many state pension funds as our limited partners, investors, and they have benefited enormously from our investments in Asia, especially in China, in the past 10 years.
Are you concerned about the ability of those limited partners to be able to continue investing in Chinese private equity firms, given some of the restrictions that have been bandied about in Washington?
I certainly will hope so. You can never tell, but I hope so, because I think it's mutually beneficial. Like trade, it's never one-way street. It's always two-way, mutually beneficial, and therefore, when people look at the benefits that you will lose, I think people think twice about taking it away.
Finally, the president here likes to talk a lot about supply chains being disrupted in China, manufacturers pulling out their supply chains, moving to other countries like Vietnam. Would you argue that that's happening at scale? And is it enough, given China's job growth, to create any kind of disruption in overall employment?
It is happening. And in fact, it has been happening for the past 10 years as labor costs rise and as currency strengthens in China. But I think with the trade war, of course, that process has been accelerated. But jobs are not going away from China to America because of the large gap in labor costs. And they're going to Southeast Asian countries and to Mexico, perhaps. So it's having some impact on the Chinese economy. But it is not going to be very substantial. And the truth of the matter is, in my view, trade war is somewhat yesterday's war. Today's war is how you get to the consumer market. The Chinese consumer market now is $5.8 trillion. And look at semiconductor companies in the United States. They sell 2.8 times more. The top 10 semiconductor companies in the United States sell 2.8 times more in China than in the United States. So, as China moves some of its manufacturing away to Southeast Asian countries, some other American companies and foreign companies are moving into China to take advantage of the growing consumer market. General Motors sells more cars in China than in the United States. So that's the reality. Competing for Chinese consumers, I think, is the next game.